positive stuff coming out from the crypto club, who donated over $100 million to the campaign for Trump and inauguration. So we're positive on the cryptos and Bitcoin because the club's in the club. And it's one big club, and you ain't in it, as George Carlin said. When Trump came into the White House, when he won the election, right, the stock markets, they spiked. Now, the Nasdaq's in correction territory. The S&P 500 down 6%.
Now we'll show you the best clips of the latest interview. Don't forget to like, subscribe, and turn on notifications so you do not miss out our daily recaps. Join our WhatsApp channel for real-time updates, breaking news, and expert predictions on gold, silver, and financial markets. Link in the description or pinned comment. Stay ahead of the curve. Don't miss out.
Gold prices keep going up, and we believe this is just the beginning. Because here's the deal. They're saying recession's going to be coming ahead. Trump will do everything he can to lower interest rates to pump up the economy. The lower interest rates fall, the deeper the dollar goes down. The deeper the dollar goes down, the higher gold prices rise. And to put this really into order, much of the world has had enough of the United States geopolitical and economic hegemony. The BRICS are the future. And the BRICS are going to do everything they can to break the back of the dollar. The dollar is not going to become the reserve currency of the world much longer. It's the beginning of the end. It's the beginning of the death of the dollar. But again, when these interest rates go down, that M&A activity is going to go up, and the bigs are going to get bigger and bigger. Anyway, going back to your Trends Journal, this is our 124th week of listing job cuts and businesses going out of business. Hey, did you hear the one today? Walmart, they're cutting over 500 stores this year. 500. And one right down here in Ellenville. An ugly piece of fucking shit. I couldn't believe when they built this thing. And what do? When they build these big things, they put all the small businesses out of business. Ellenville is a ghost town, but there's a great restaurant there. Aroma Time, really fine. All organic, local stuff. Mwah. But anyway, good. Keep closing them down. Your economic update. All right, the markets yesterday went, hey, the markets are way up. How come? Well, Trump said he's going to hold back on them tariffs. Another day of bullshit. So today we're at tariffs April 2nd. So what's today, the 25th? Hey, a couple of more days. We're going to see those tariffs, huh? Let's see if on April 2nd, Trump imposes those tariffs. Again, if he does, you see where it's going. Get ready for the dot-com bust 2.0. No one hardly is talking about this. We've been talking about this since February, I think, 4th or something, or 8th round. I forget the date. Around the 4th, I think. Yeah, well over a month ago. Almost 2 months will be. Soon. This is going to be serious. And also a whole article here on the office building bust that no one else is talking about, which is going to bring down the banking system, and you see the bank stocks going down.
In today's news recap, gold traders eye $3,150 with PCE and tariffs dictating near-term direction. Gold prices are range-bound following the recent pullback as traders have turned their attention to PCE inflation data and tariff updates for direction on the next move in the gold market, according to analyst James Hyerzik at FX Empire. Gold prices are holding steady at the start of the week, pausing after last week's sharp two-day pullback, Hyerzik wrote. Monday's trade remains confined within Friday's range, signaling indecision as traders await fresh catalysts. The precious metal remains in a broader uptrend, but near-term correction risks persist, especially with key macro data and tariff-related headlines on the horizon. The U.S. dollar is supporting gold prices at their current levels, with the dollar index pulling back 0.1% on Monday, adding to its 3.4% decline in March. A softer dollar typically supports gold by making it more affordable for overseas buyers, he noted. This dollar weakness has helped stabilize gold prices following the recent retreat, offering short-term support around the $3,000 level. Markets remain alert to potential economic fallout from U.S. President Donald Trump's proposed tariffs set to take effect on April 2nd, he wrote. While Trump hinted at possible flexibility, concerns remain that retaliatory measures could stoke inflation and slow economic growth. Analysts suggest that a more aggressive tariff stance could push gold toward the 3,100 level, while a less severe outcome may open the door for brief dips below $3,000. In terms of the interest rate environment, gold remains well supported by the Federal Reserve's relatively dovish stance, with the central bank still projecting 2 rate cuts in 2025. Traders are now turning to Friday's release of the U.S. Personal Consumption Expenditures Report.
You ready? This is in your economic update. According to Morgan Stanley, when the Magnificent Seven was flying high at the end of 2023, S&P 500's top 10 stocks accounted for 27% of the index. Yep. And they kept climbing and climbing and climbing. Last year, the S&P 500 was up 23%. And now, down 6%. The Magnificent Seven isn't so magnificent anymore. You see BYD coming out, wiping Tesla out, and one Chinese company after another. This is from a report today out by CNBC. They report that as a result of Trump's tariff plans, 90% of CFOs, financial officers, expect resurgent inflation, and 60% expect recession by the second quarter of this year. 60% recession, 90% more inflation. You know what that is? Dragflation. Economy dragging down, inflation going up. That's right. And remember, I keep saying, when all else fails, they take you to war. A whole section in this Trends Journal about all the European nations that are spending trillions building up the war machine. Trillions when you put it all together. And selling the bullshit that this is going to build up the economy. No, it's not. All the money goes into the hands of the military-industrial complex. Economies go up when you're manufacturing things that people buy. Ain't nobody buying them weapons. That's coming out of the pockets of the taxpayers. That's just building up the debt. And isn't it wonderful that Germany's building it up the biggest? Oh, yeah, you like World War I? Nah, we like World War II better than Germany gave us. Let them build that military up. And now they got that Mertz cat in there. Oh, where's he come from? BlackRock? Yeah. Oh, yeah. Oh, by the way, look at your M&A activity. It's going down in numbers, but the bigs are getting bigger. And more of the private equity groups are buying up the biggest. Yep. So the numbers are going down because the interest rates are still high. But the bigs are getting bigger. Yeah. Again, when I was a young man, there were no private equity groups, venture capital.